All right, let's get to those charts now. Hebe Chen from IG is joining me with more. Hebe, hi, welcome to the program. Nice to have a chance to speak with you. What's up first?
Good morning, Nadine. Yes, Han, happy to see you again. Today that we are looking at the three charts that I have prepared. Probably I will start with Tesla. I think Tesla share prices did surprise many buyers. They jumping up as much as 6%, and we know that the Tesla did not have enjoy a good start to the year. Its prices actually has dropping as much as 40% for the first 4 months of the year, but now it seems that the price has gained back about 48% from the end of April. And the reason that we're seeing the share price for Tesla jumping so much last night is because the investors are rushing into the market, waiting for one of the crucial quarterly sales report to be released later today on Tuesday US time. Projection for that wasn't that positive. The expectation is about a 6% drop in sales, which will be the second quarter of the dropping in terms of sales. But it's quite interesting that the investor seems not taking it as quite a negative news. So from that perspective, my takeaway from that is it's probably safe to say that the page, while quite a terrible page for the Tesla, probably has turned over because the investors now lower the expectations for the Tesla sales and ready to embrace a new norm for that. And looking for the technical point of view, you can definitely see that after these 8 weeks of the 48% gain, the price is now making a step into a quite crucial level here, and especially after last night's 6% up, they're making a 3 major breakouts, which I also highlight here. One is that it's a 200 simple and the moving average, which is the first time for the Tesla's price to overcome this level since early this year. Second one is the two previous peak back in the February as well as April. And in between of that, there's $200 psychological level, which is also quite significant. And the third one, which is the 50% of Fibonacci retracement level. So putting all that together, which I think form a pretty promising and also quite bullish sign that to assume the momentum for Tesla actually stay pretty strong into the second half of the year.
Okay, so the bulls are in charge when it comes to the technicals behind Tesla. Got it. Can we talk gold? I haven't had a chance to speak gold today. Are we, is there a bit of a battle going on between the bulls and the bears when it comes to gold?
Yes, definitely. I think it's a pretty tricky point for the gold, and I do understand from both sides because for me, I think fundamentally I do see quite a lot of reason to buy into it, and the simple reason for that is because we're seeing the gold price is jumping at 13% this year so far, and the big driver behind is a projected weakening US dollar plus the geopolitical tension, which brings the more appealing points for the safe haven. And for these two key elements, we expect that will continue into the second half. I think that's the reason I think from the fundamental view, I do think the reason for being bullish about the gold. But I also noticed a couple of the bit of a bearish side in the technical point is if you're looking for the past 2 months of the actually since the April, the movement for the gold, yes, from temporarily you can see that it seems to escape the head and shoulder patterns, which I also highlight in back into the April 2023, a pretty similar head and shoulder, but we're seeing the S2, which I highlight here, meaning that price is moving sideways. It did not dropping below this 2286 level to making this head and shoulder valid and to suggest more a strong bearish sign. But after the price movement after that, we're seeing that it's dropping below this trend line, which is a dash line here. And given that last week's PCE that helping the gold price to regain a bit of a strength by the end of last week, but it did not actually successfully overcome the 20 and the 50 days moving average, which meaning that sellers still not giving up, still in the market. And as you said, that the battle in between the buyer and seller still pretty fierce at this stage. I think that both sides are waiting for more indicators ahead of the months, and that will significantly impact the outlook for the gold into the second half of the year.
All right, so that's gold. Now, I just had a conversation earlier in the piece with a guest who was telling me that it looks as if the Chinese authorities are allowing for a mild depreciation of the Chinese yuan. Are we seeing that at all in the crosses?
Yes, I think we're getting more signs from that. And one of the most direct and straight signs is that PBOC's governor saying in the previous week that given that the Western economies that go into the easing journey towards the end of 2024, they do see more room for them to move, the more room for them to ease in the monetary policy to support the economy. And that's also the reason why I bring up the Australian dollar versus the CNH, the Chinese yen. And the reason for that is because I sort of asked myself a question: is there any two central bank that we are the most certain that we're moving into the two different directions? So I think the the RBA is one of them. PBOC will be the one that moving in the totally different direction. So that's the reason why I feel that there's more clear sign, more clear direction for the Aussie dollar versus the yuan. And from the technical point of view, you can also see that since the October 2022, you can see that the uptrends actually pretty clear for the past more than 1.5 years, or nearly 1.5 years. The uptrends actually pretty clear. We zoom into a bit near starting from the end of last year, which I also point out there's the bottom, double bottom here, which meaning if the price get to overcome the level of a 4.8 or towards the 4.9, which will overcome jumping above the shoulder line of this double bottom patterns, they will help these pairs quite successfully moving towards the 4.93. And this is the level that the high is leveled in more than nearly 3 years since 2021. So once the prices, if we get to see the chance, for instance, the RBA stay pretty hawkish and we see the PBOC signals more signs of the easing, the chance for this pair to jumping out of this like price band since the end of 2021 to touch on its highest level in 3 years at some time of July, I think it seems pretty much likely a potential playbook if we see the pair, both of the currencies moving into the directions that in the past couple months.